Despite slower inflation, the government missed its goal for the year-end average. It was at 6%, and that's way above the 2 to 4% target. Let's get an inflation and market analysis with AAA Southeast Equities President William Cabangon. Will, Happy New Year to you. This is great news in 2024 to start of the year. Inflation now at 3.9%. Is this encouraging?
It certainly is. Like you said earlier, we were way off the inflation target last year. And now this is the first time that we have been inside the BSP's target range of 2 to 4% inflation for several years now.
But it was only achieved in December of 2023. So, I mean, the BSP totally missed the mark for the full year.
It's no secret that inflation was out of control for the last 2 years. That was largely driven by external factors, high gas prices, high food prices. But I think there's a lot of things to be optimistic about this 2024.
But also there's a caveat here, Will. The cost of rice accelerated to its fastest level in 14 years to 19.6% from 15.8% in November of 2023. Is this a concern?
I mean, of course it's a concern. The Philippines is, I think, officially now the world's largest importer of rice. We don't produce enough of it. So we really are subject to the global price of rice. And as long as that's running higher, we're going to have to shoulder that burden.
3.9% in December. Could this be a sign to the Bangko Sentral ng Pilipinas that it is time to ease on high interest rates?
I think that would be a bit premature for the BSP to sort of do their victory lap now that they're within 0.1% of the target band. So, you know, I think if I were the BSP, I would probably hold off on lowering rates at least until the U.S. Federal Reserve does so. Because should the BSP front-run the U.S. Fed in cutting rates, we're going to see the peso depreciate again. And that in turn could spark another fear of
inflationary pressure.
That's right.
But when are you forecasting for the Fed to cut interest rates?
Right now, at the market's pricing in the Fed to cut rates by March. Personally, I think that's a bit optimistic. I'm looking at the second half of this year as when we start seeing rates come down.
And that is also the view of some investment banks here in the country. June or July of next year would be the most optimistic time to cut interest rates by the BSP. So with slowing inflation, what could this mean for growth targets for the Philippine economy from October to December? Because the BSP is also out of range when it comes to its GDP targets.
I think it's very encouraging. A lot of companies have been holding back investment, primarily because borrowing costs have been so high. So should we see those costs fall in the second half of the year, we will see more investment and hopefully more spending that will boost GDP growth this year.
And what is AAA Southeast Equities' view of the economy for the fourth quarter of 2023? Will it basically outperform the first 9 months of last year?
Typically, we do see the fourth quarter outperform previous months, mainly driven by consumer spending. But I am not so optimistic, primarily because it's been so hard to do business in this high interest rate environment. So I'm expecting probably a slight underperformance relative to expectations.
We have to attain at least 7.2% expansion in the last quarter to achieve even that 6% full-year growth target of the Bangko Sentral ng Pilipinas. You think that's achievable, Will?
I wouldn't bet on it. I think it's a bit optimistic, but it would be a very welcome surprise if so. What
is your outlook for the Philippine economy in 2024, given that we still have an elevated interest rate environment?
Well, I have been pretty outspokenly bearish the last few years. But I think 2024, there's a lot to be optimistic about. Like we mentioned earlier, inflation is coming down, it's trending very much in the right direction. And I think once we see the rates do come down as well, we're going to start seeing much stronger growth. We're going to start seeing a rising stock market. Our property sector, which has been battered really for the better part of the last 2 years, should recover. And really, you know, there's a lot of things to be optimistic about.
And we've seen some kind of optimism in the stock market in the new year. It's up by 1%, 200 points over the last few trading days. Is this a sign of good things to come for the stock market?
That's right. Actually, I was checking earlier. The PSE is actually in the top 10 best performing stock markets in the world to start off the year. So,
well, because it's also coming from a low.
Well, we'll take what we can get, right?
We have to be optimistic. But of course, whenever we succeed, we sometimes shoot ourselves on the foot. I mean, this major power failure in Western Visayas, Panay Island, Guimaras Island, which are islands of big businesses. I mean, when this is talked about on the international scene, this is not good news.
That's right. Unfortunately, we here in the Philippines don't exactly have the best reputation when it comes to power supply and power generation. I think as far as Southeast Asia is concerned, we might have the highest electricity rates in the region. And that's really what's causing the lack of manufacturing here in the Philippines versus our neighbors like in Vietnam or Thailand. So it's clearly a negative. It doesn't help our cause, but we'll have to turn these things around.
So what are investors looking for right now? Are the positives in the Philippine economy that could drive the Philippine stock market even higher?
Well, right now there are many catalysts here in the Philippines. We're looking at very strong bank earnings last year. I think many people are expecting a revived real estate sector next year. And consumer spending, I think by and large, has not really slowed down. So, despite the challenges that we're seeing in the headlines, I think the Philippine economy, Philippine business is still very robust and should perform quite well this year.
What about power? Is that something that investors should be looking at? I mean, we need more investments in our power grids. We need more investments we're seeing a lot of them right now in renewable energy, but not in our grids, which will be basically taking up all of this capacity.
That's true. I mean, to be fair, power generators have had great stock price performances over the last year. Your Semiraras, your Aboitiz Powers, they've been doing quite well. Unfortunately, it's the consumers of that power that haven't been doing quite well, like we've seen in Iloilo. But as far as investing is concerned, power should continue to yield positive returns for investors.
You were talking about the property sector. What is the upside for the property market in the Philippines?
The property sector for the better part of the last 2 years has really taken a beating. Most are trading at single-digit price-to-earning valuations. So just in December, we saw Ayala Land rally by about 10%. They're obviously the elephant among the real estate sector. And I expect the rest of the sector to now follow them. So I expect a 10% increase in share prices across the property sector should be very reasonable for this year.
And which particular sectors will continue to be laggards in 2024?
I think conglomerates will continue to be laggards this year. They have largely already rallied last year, and I don't see much more room for them to really push prices higher. So I think that's where investors can sort of take their foot off the gas.
And of course, investing in the stock market, Will, is not also for the faint-hearted. What is your advice for new investors who want to put their hard-earned money in the stock market and potentially see maybe make money or even dividends?
Yeah, I think right now, when the stock market's doing well, people want to get invested. They get very excited by the thought of quick riches. But I'd like to tell them that the stock market is not the place to get rich fast. Because if you get rich fast in the stock market, you typically get poor fast too. So I would encourage investors first-time investors, to get educated, to really take the time to learn about the economy, about the businesses that they're investing in before pulling the trigger.
So apart from the stock market, where else can our kababayans put their smart money?
Well, thankfully right now, interest rates are still very high. So fixed income like government bonds, even your bank time deposit, these are yielding historically high returns at relatively little risk. So if you are not very comfortable investing in the stock market, perhaps fixed income is where you should be.
Will Cabangon, thank you so much for your market advice. President of AAA Southeast Equities. Happy New Year.
Happy New Year.